on board Sanjiv Bhasin as well and figure out what he's making of the market texture right now. Sanjiv, hi, morning. Good to have you on the show. And, like you were talking about yesterday, it's time to definitely tread with caution. But I want you to really, sort of drill the point home for our viewers that there is no harm in the market consolidating at this juncture. It's only but healthy.
Yeah, good morning, Aisha. Good morning from Gurgaon. 6.5 degrees. so no complaints on markets and the weather. The best time to be in Delhi. Yes, the market consolidation is there, and we had run up to maybe irrationally, and that has seen a little bit of climax. So we've corrected about 400-500 points on the Nifty, which is healthy for the market. I would expect this to end by today. There is an up move of about 200-300 points, which can come today, tomorrow. Tomorrow I'm in Bombay, hopefully in the morning. Aisha, the two things which have happened is one, yes, there were the Fed minutes and other data, but all markets globally had run up maybe too excessively, and there was some bit of profit booking. In the US particularly, I think that Apple downgrade has hurt sentiment on the IT stocks. However, two things have happened. This unfortunate devastating earthquake in Japan will now see a lot of long-term money buy this opportunity. In fact, I would say that this is the time to be upweight on certain, where you are getting these type of, unforeseen sell-offs. So I think Japan will be a key market which will see a lot of inflows because of this one-off event. And I would expect India to be, slightly bit of an outperform. I'm again amazed at the strength in the mid-caps. Yesterday, again, the mid-cap index was up. So we are not complaining. All we are saying is that there will be a sectoral churn. I think now it's the time of banks to come back. And if you are looking for an opportunity, then use this next few days weakness in metals as a proxy to the dollar to buy. So I am expecting today afternoon the market turns. And God willing, tomorrow we should be in the green.
So since you're talking about metals, any names that you could give our viewers?
Tata Steel and Nalco. As a disclosure, both these are in our portfolio from, of course, much lower levels. But if we want to play both the aluminium and the steel cycle, it has to be Tata Steel. Tata Steel has consolidated for over 3 years. After that one-off move to 150 or maybe 2.5, and now it's looking set to cross that 150 mark, 175. I think Tata Steel has actually lagged the rest of the pack, the sales of the world. And now, given that Chorus is seeing a lot of traction on the upside, their local business are doing extremely well. I would say Tata Steel and Nalco are definitely an add on declines over here.
All right, add or on declines, that's the strategy for some of the names. Stay on with us, Sanjiv, lots more to discuss, but as promised, we've got Sanjiv, let's get in your thoughts and wanted to understand what the outlook is on the overall FMCG sector. We've been talking to a lot of guests as well as corporates, and it seems like rural demand seems to be quite weak, and volume growth, which has been impacted in the December quarter for a lot of these FMCG companies, is likely to further continue to remain rather muted. Is that a worry?
Well, we know that the base has been higher and there has been a definite slowdown. But I think it's part and parcel of the growth trajectory. So except lever, we are bullish on Nestle is our top pick. We like Colgate and we like Marico as a dark horse. These three names in that order. We have them in our portfolio and we will stay with them. Awan, there is a sectoral change. So when you get into high beta stocks on the PSU side, generally there will be some brokerage note which is negative on FMCG, and we know FMCG has been a little bit of a laggard. But we want to be with the leaders. I think Nestle is setting new highs. I've had this in my portfolio from 6,500 levels, and I don't intend to sell it. I think Colgate is only gaining market share, and Marico could be the dark horse, which is a very good play on the Parachute hair oil, which I think is gaining more and more market share. So we would keep it in those three. A lever is an avoid for us.
View on FMCG as a whole, and where do you stand when it comes to Tata Motors in specific? I know you have your preference towards an Ashok Leyland within the auto space, but given that there are expectations that we could see JLR strengthening their margins going down the line, the balance sheet deleveraging, reducing, what is your outlook on Tata Motors?
Well, technically it's been the star of the auto pack, and auto has already been in a, huge perpendicular upside. So I think Tata Motors will continue to be in that space, but we don't find the valuations attractive enough. Like I said, I would put more money on Ashok Leyland. Now these are left out feeling by few large brokerage houses which have underperformed on the Tata Motors side and which were bearish. Of course, turning bullish after a doubling is very, very difficult for us to sustain. We think a large part of the volume growth is already in the price. And you're talking now of China comeback. If China is going to come back, I would rather play the metal cycle. I think that is a very good proxy to that. We continue to be overweight Ashok Leyland. Tata Motor is in our portfolio.
Another interesting note from delivery as well, or rather Morgan Stanley on delivery. They've upgraded the stock now to an overweight from the earlier equal weight, up the target price as well. And they are saying, Sanjiv, that they see improving growth trends in the express parcel business. But you think delivery should be the best of the lot as a pick?
Aisha, I think there is a lot of competition in this space. These new entrants look attractive because they are in that pedigree of the, everyone tries to ape Zomato and in the businesses. But I would expect a lot of more margin pressure to consist. I am not that optimistic on delivery, but I am very, very bullish on Zomato, Paytm and PB Fintech in that basket of Fintech stroke, unicorns. I am very, very optimistic on those three stocks. Delivery is something I will give a miss. But I am again reiterating, don't miss this opportunity of getting into Paytm, PB Fintech and Zomato on any decline.
Let's understand the chart readings. Maybe Kunal, have you had a look at Zomato, Paytm, PB Fintech on the charts?
So yeah, I think PB Fintech closer to that 800 mark looks to be an attractive proposition. The stock has done reasonably well. It's a comparatively low volatile stock as compared to the other, two, not exactly peers, but two similar space stocks for Policybazaar. So that's one stock which looks attractive. Zomato, I think closer to 120, 130 range has been consolidating. So, there's no major change in terms of the volume data for the stock price. It's just gone through a very strong uptrend and it's just now staying at those higher levels. So, which means that the stock is consolidating at a higher level, which again is a good sign for the stock, because when the stocks consolidate at a higher level with no major change in terms of volumes, we still expect the trend to continue for the stock. Paytm, on the other hand, has been a bit all over the place in terms of the price trends. The stock, which was almost at 850, 900 sometime back, has fallen down to sub 700 levels. Even at current levels, there has been bouts of recovery or rally for the stock price, but it's not really engulfed into a major uptrend for Paytm. So I'll probably wait and watch the stock at current levels. Would not probably want to jump in till the time the prices settle, rather the volatility settle and the prices go into a trading range.
Okay, that's that on the fintechs, but channel checks are suggesting that chemicals have experienced some price changes on a month-on-month basis. What's going to be the impact on the chemical stocks? Samit is here to explain that. Samit?
Well, on a month-on-month basis, in the month of December, if you see, crude prices have corrected, which have led to correction in the chemical prices and also contraction in the spreads. Now, when it comes to chemical prices, firstly, acid prices are up around 4.4%, and this is positive for GNFC, but negative for Lakshmi Organic and Jubilant Ingrevia. When it comes to caustic soda, that prices are down by around 1.3%. Now, this is positive for users like Urban Mills and JNFC, but negative for manufacturers like Grasim, DCM, Shriram, and GACL. Apart from that, soda ash prices. Now, that is important for Tata Chemical and GHCL. Now, these prices are up 22%, but do remember that there is a disconnect between China prices and Indian prices due to local demand-supply dynamics. So, hence, we'll have to wait and watch how Tata Chemical reacts to this increase in global soda ash prices. When it comes to phthalic anhydride, prices are up around 2.5%. Now, this is positive for Thirumalai Chemical and IGPL. Palm kernel oil prices are down around 1.1% on a month-on-month basis, and this is marginally positive for a user like Galaxy Surfactant. When it comes to spread, firstly, the caprolactam and benzene spread is up around 10 odd %. Now, this is positive for a user like GSFC, ethyl acetate and acetic acid spread has contracted by around 2.5%, and this is negative for Lakshmi Organic and Jubilant Ingrevia. When it comes to acetone and benzene spread, that has also come down by around 1.9%, and it's negative for Deepak Nitrite. PVC VCM spreads have come down by around 4.2%, and that is negative for Chemplast Sanmar. And lastly, TDI Toluene spread has expanded by around 1.1%, and this is positive for GNFC but slightly negative when it comes to a user like Sheila Foam.
All right, thanks very much for giving us that heads up, Sumit. Sanjeev, maybe we can get in your take then on some of these stocks within the entire chemical space. How are you looking at the overall, what the channel checks are indicating and what it means for the likes of a Lakshmi, Organics, DCM, Shriram, etc.?
So, Avan, we've been rather contrarian on the sector in the last 2 months, and 3 of our picks have done extremely well. SRF, Aarti Industries, and Tata Chemical. Tata Chemical close to 950, SRF close to 2170, and Aarti at 465. These 3, I think, will outperform the market. You can add a Navin Fluorine on decline, but I think these 3 stocks will outperform. You see, a large part of the plateauing of prices, one up, one down, is just a transitory effect. I would expect China to bounce back, and that will be the real trigger for some of these stocks to do well. But a large part of the negatives is already priced in, at least in the earnings. The earnings now seem to be very positive. And if you see the price of GNFC, the stock from less than 680 is almost touching 800. So continue to be positive on SRF, Aarti, and Tata Chemical, which are in our portfolio.
Specific name here, Vaibhav Global. I'm talking about it. Why? Because volumes yesterday were 28 times more than the 10-day average. Anything that comes to your mind? It's there in terms of the volume buzzer list which I have.
So the stock, since I think September is where the stock had made a high for itself, a swing high. I'm not saying an all-time high, swing high of 460 approximately. From September till yesterday, the stock has been going through a price-wise and a time-wise consolidation. Now the good part is that the stock has come back above the 50-day moving average yesterday, and the other positive part about the chart is that even in this last 3 months, 4 months of consolidation, the stock has not broken its 200-day moving average. So what we typically look out for is a breakout of this flag pattern. So yesterday was the first sign where the volumes shot up higher. If the prices see a follow through and if it sees a breakout, that's what we call it as a price volume breakout for stock prices. That level I think is closer to 460 for Vaibhav Global. So I think if the stock manages to cross over another 30 rupees on the upside, it could probably challenge this 460 mark, and that could lead to a very strong multi-month uptrend, because the stock has been beaten down from 2021 highs of more than 1000 plus levels. So for the stock to recover and get into an uptrend, it has to break past about this 460 level.
Sanjiv Bhasin, let's close our today's interaction, morning interaction rather, with a view on pharma, because barring one or two sub-revenue streams in pharma, the US generic market is looking challenging. And I was reading a great report from Bernstein, I think a couple of days ago, which specifically mentions that the year there is elections in the US economy, or in US, Indian generic companies, they tend to underperform.
Well, is glass half full, half empty? The valuation comfort on some of the stocks was very, very strong. Plus, Nikunj, the smart money actually was underweight IT and overweight pharma over the rupee effect, the dollar, index. And thirdly, I think large part of the pricing weakness is priced in. Companies themselves have geared up to that and have explored new geographies and so on. Aurobindo, Dr. Reddy, Cipla, and Lupin have been 4 which have performed brilliantly. Now, Aurobindo takes the cake because of injectables and so on. But I think there is still room on the upside, given that, after on an election year, generally, you know that some of these, roadblocks ahead are temporary. So I think that now their shape of becoming truly global companies is very much on the cards, and some of the manufacturing part is actually catering to that. So the China effect is slowing down, and India itself is gearing up to a lot of these companies now becoming manufacturing hubs for the larger play. And I still think Pharma Index has been an outperformer and can outperform. on the back of proxy to the rupee and on the back of being a defensive sector, which in the current volatility stands out. Even, by the way, Apollo Hospital, which was my top pick at 48, 47, 100, has hit a new high. So it's telling you that smart money has actually gone into that chain. So Apollo Hospital and KIMS are two other stocks which are in our portfolio and which have done exceedingly well.
All right, Bhasin Saab, appreciate your time. Thank you for joining us. Hemang Jani, good morning.